Hello everyone, welcome to the channel Accounts Global. Students, in this lecture, let's discuss the journal entries for expenses. You must know expenses, the cost incurred in generating income, that is termed as expenses. And there can be three cases of expenses. Remember students, there may be three situations. Number one, when expenses are paid in cash. Second, outstanding expenses. And third one also, prepaid expenses. These are also paid in cash. Now the first case, see, paid in cash here, I mean to say that expenses paid for the current year, the expenses whose benefits are received immediately or within the current accounting period. We have to pass journal entry for this. For example, we have a transaction salary rupees 20,000 paid in cash. See this, salary rupees 20,000 paid in cash. This is the expense. Salary is an expense, and expense falls in which category? That is nominal account. And what is the rules of debit and credit as per the nominal account? Debit all expenses and losses and credit all income and gains. So friends, listen, in every financial transaction, always there are two accounts. Here also, one is the salary account and second is salary being paid in cash, that is cash account. So salary is what? Salary is an expense. So expense means it is a nominal account, so it will be debited, debit. And cash is what? Cash is an asset, and this falls in real account. Debit what comes in, credit what goes out. So when cash is coming in, it is debited, but now in this case cash is going out because we are making payment in cash, so it will be credited. So the journal entry in this case is salary account debit to cash account. You have to pass this journal entry in the format, proper format, 20,000. See this students. So the first case, when expenses paid in cash and the expense whose benefit has been received or is likely to be received in the current year, this entry is passed for that. Now the case number 2. What is this? Outstanding expenses. Outstanding expenses means what? The expenses due but not yet paid. See, expenses due not yet paid. It simply means we have taken the benefit of these expenses, but their payment not yet made by the organization. These are the outstanding expenses. And outstanding expenses give rise to liabilities of the organization, and this form the liability of the organization. Liability means which we are liable to pay in the future, that is called a liability. So which two accounts are taking place here? Just see, for example, it is salary due rupees 22,000 but still unpaid. Unpaid means not yet paid. So which two accounts are taking place here? One is salary and second is outstanding salary. See this. And like the first case, salary is an expense. This fall in the category of nominal account. Since it is falling in the category of nominal account, it will be debited because it is an expense and it will be debited. Second is what? Outstanding salary. Outstanding salary form the part of liabilities. And one thing you need to understand about the liability, When liabilities increase, these are always credited, and when liabilities decrease, these are debited. This is the nature of the liability. In this case, since we have not made payment of the expenses, that is salary, and that is likely to be paid in future, so until unless we make the payment, that remains our liability, and the liabilities are always credited. So our journal entry will be salary account debit 22,000. You have to pass the entry in proper format to outstanding salary account. This is the journal entry, and this is the treatment of outstanding expenses. If in place of salary it is wages, wages account debit to outstanding wages. It may be repairs account debit to outstanding repair account. Now the third case, friends, see this. In the first two cases, you must remember, in these cases we have derived the benefit of the expenses. Derived benefits, it means the expenses for which we have made payment or we are likely to make payment, we have taken the benefit of these expenses, and these expenses belong to the current year. But the third case is a little bit different. Prepaid expenses. Prepaid simply means paid in advance. Paid in advance. See, and there are two accounts in this category, and the first one is cash, because we have made the payment in cash, and second account is prepaid. Prepaid expense. It may be salary, it may be repair, it may be wages. So the first simple thing you need to understand, any transaction in which cash is taking place, if cash in is coming in, debit, that is a real account. If cash is going out, credit. This is a simple funda, and here is what is taking place. Cash is going out, so it will be credited. Cash is a real account, credit what goes out. And what is the prepaid expenses? Expenses paid in advance for the next accounting year. Our accounting year ends on 31st March every year. And expenses which have been paid beyond 31st March. It means benefit of these expenses is likely to take place in the next accounting year. It means these are the expenses of the next accounting year and not of the current year. And anything whose benefits are likely to accrue, are likely to take place in future, they form the part of asset. So prepaid expense is our asset, because we have to derive benefit of these expenses in future. And increase in asset, you must know, increase in asset is always debited and decrease in asset is credited. And here asset is increasing. Just see, there are two assets. Cash is also asset, prepaid expense is also asset. Cash is decreasing, it is credited. Prepaid expenses, I mean asset is increasing, that will be debited. So our journal entry will be prepaid expense. It may be salary or anything. Prepaid expense account debit. You can take any amount here to cash account. So this is the journal entry. So dear friends, you need to understand the third case carefully. It may have an alternative entry also, later on we will discuss that. But the simple journal entry is this. Prepaid expense यानी prepaid salary account debit to cash, prepaid rent account debit to cash, prepaid repair account debit to cash. So in this lecture, I have discussed three cases: expenses paid in cash whose benefit is derived in the current accounting period, then outstanding expenses, benefits taken but payment not yet made, and third one, prepaid expenses, benefit not yet derived but payment made. I wish the concept clarity is there. Click the like button, share the video with your friends and classmates, and subscribe the channel if not yet subscribed.